Monetonic has been spearheading several initiatives from the investor education point of view, and this is of paramount importance for us. So as part of this, as you are aware that in the global scenario, there has been a lot of crisis all over, and investors have been contacting us on what should be the strategy, and there is a lot of panic all around. So from this point of view, we then would like to give you a perspective from eminent personalities who's from various fields in the finance industry. As you must be hearing in media all over, there has been a lot of FII selling and DI buying in the equity markets. So this has led to confusion in terms of what is the perspective of FIIs. And when it comes to FII, we thought of Mirae Asset Management Company, whose parentage is from South Korea and has been a stellar performer in the Indian markets from the last 5 years. And Mr. Gopal Agarwal, CIO of Mirae Asset Management Company, has kindly agreed to give his perspective on FIIs from his interaction with them. Hello, Mr. Gopal Agarwal.
Hi.
I would start with the first question, which is on everybody's tongue, which is global recession. Do you think that we are headed for a global recession or a meltdown, or would this be an overstatement?
I think we are clearly in a slow growth world, but we are not in a recession because the world economy is expanding, and we are seeing this year the world growth is likely to be in the range of 3.3%, and which is likely, and it is going to be expanded to around 3.7% in CY16. In the past, we used to grow between 4.8 to 5%. So in that aspect, we are definitely in a slow growth world, but definitely we are not in recession. Second point is that we are seeing clearly the employment growth across the globe. Even in Eurozone, which is under pressure, their unemployment rate has fallen from 12% to 10.2%. And in US, from peak of around close to 9%, now it is around 5.3%. So things are moving, but albeit at a gradual pace.
How do you think that FIIs view the Indian markets from a short term and medium term point of view?
Clearly, India is looked at very favorably in the current global scenario because currently we are in a slow growth world, so the commodity markets is under pressure. Being a net importer of commodity close to the worth of $175 billion every year, India is a clear beneficiary of fall in the commodity prices. So India is a net gainer, and we have the strong demographic dividend. So in this backdrop, FIIs are looking very favorably to India. But however, their positivity has fallen to some degree in the near term because of lack of speed of reform, a washout of the monsoon session, because we were expecting that GST bill to get through or some improvement in the land acquisition bill. So this led to some degree of reduction in optimism, though they are positive. Structurally, in long-term view, the FIIs are very positive on India, but in the near term, because of slow pace of reform, led to some moderation in this optimism.
There has been a lot of discussion of the Fed rate hike and its impact on the Indian markets. So can you please give your view on what will be the impact of any Fed rate hike?
This event will have a very short-term impact on the market, and especially it will happen if India have not very high degree of growth. Definitely we need to have a robust growth at that point of time, because historically what we have seen, the current account deficit doesn't matter much to the currency. What matters much is the growth differential between India and US. So if our growth picks up by that point of time when the Fed is raising rate, or you have some bills getting passed through the parliament, then definitely that the trajectory will look very positive. So you will have less volatility in Indian market. But generally what we have seen in the past two event, whenever the Fed has rate hike, so it creates volatility for around 3 months, and in the next 6 months actually INR has appreciated by close to 6% in the past two events. So I would convey very emphatically that any volatility would be short lived, and we have seen that in the next 6 months the situation actually normalize and turn favorable for emerging markets.
What do you think are the key triggers in the Indian economy that FIIs would monitor? And also, what do you think are the key actions that you would look at from FII point of view from the Indian policymakers?
See, clearly the windfall gains with India will have because of the fall in commodity prices and the structural demographic dividend. Though I am repeating it, but these are the real very positive triggers for the FII to look India very favorably. And what they would like to see that these advantages are turned into favorable opportunity. So the right policy making decision is very important. In the past, India has not able to capitalize a lot on this opportunity because of the policy logjam. So they want to see that really we get the key bills passed through, reduction in subsidy, job creation, and the creation of big infrastructure opportunity in India. These are the key variables which FIs will watch to invest materially in the years to come.
Thank you so much, Mr. Gopal Agarwal, for sparing your time.